Good day, dear traders. Let us review the economic events of the past week. The US markets ended Monday's session marginally lower. The stock indices were dragged down by falling energy stocks. Investors are getting rid of energy and materials sector stocks amid falling oil prices. Oil prices fell on Monday on weak global demand, stronger dollar, and fears Saudi Arabia could announce another price cut after last month it slashed prices. The unexpected decision by the Saudi Arabia on Monday to cut oil prices for US resulted in a further slide in oil prices on Tuesday. The S&P 500 finished 5.71 points or 0.3% lower at 2029.1. European stock market slumped in late trading on Tuesday. The cut of growth forecast for the Eurozone by the European Commission did not help to bolster investor optimism. The ADP non-farm employment change in October was released on Wednesday in the US. The increased number of jobs appeared to be at the highest level since June and exceeded the forecasts. S&P 500 and Dow Jones Industrial hit new historical highs. The euro is rising ahead of the next ECB meeting and its President Mario Draghi speaking at the press conference. European markets upped less than the US markets. Grain futures, precious metals, coffee and cocoa continued to fall as the US dollar strengthened and the Chinese economy showed signs of recession. World market continued to rise on Thursday. S&P 500 and Dow Jones Industrial hit new historical highs once again. The US dollar index kept rising. Stocks Europe 600 updated the 5-week high. Investors deem that the part of additional liquidity from the euro issuing may end up on the stock market. The US dollar continued to fall on Friday after US employment data were released. The numbers came out below the forecasts. As reported by the US Department of Labor, total non-farm payroll employment rose by 214,000 in October. The US dollar slipped against the yen. The Bank of Japan governor said that the economy benefits from monetary policy easing and the monetary stimulation produces the expected effect. One of the main events of this week is the release of unemployment claims in the US. The number of unemployment claims is expected to grow at least 3%. On the whole, investor sentiment confirms the slowdown in the American economy recovery. If the annual number comes out higher than the forecast, we should expect the US dollar depreciation against other liquid currencies, as well as a temporary slowdown in growth of major US stock indexes. This was all for this week. See you next week.